In a world where digital interactions are becoming the norm, trust is not only a sentiment, but rather a real asset. And historically, lending has been backed by collateral and assets are held storage to make sure that you're good for your own word. But in this world that digitally we're becoming more and more present and that our reputation is more online as the time goes on, isn't that a better way of doing this? Aren't we missing a piece that we could be using to provide financial access to these people? Imagine a world in which your credibility is determined by not the assets that you possess, but rather your history, your digital footprint. That would be awesome, right? In order for us to better understand this, let's delve deeper into an example of how a trust-based lending system could work in practice. The first step of this process is to create a digital identity. And this is more than just a username or a wallet number. This is something that will really track your interactions, your transactions, and your footprint in the Web3 ecosystem. Second step of the process is to build your reputation. So as you engage in transactions like purchasing an NFT, voting in a DAO process, or just paying for a service online, you will be contributing to this digital footprint. Positive actions will contribute to your credibility, while the negative ones will detract from it. The third step, it's AI analysis. So with all of this data on-chain, it's hard to make sense of it. So we need some artificial intelligence to help us make sense of what is the quality of the transactions and interactions that each user is doing in the Web3, and not only the number of transactions or the volume, which can be easily manipulated. So by looking at the type of transactions, the different categories that you interact with, if there were any disputes in the actions that you had, you can create a dynamic trust score backed by an artificial intelligence that help us make sense of all of this bulk of data. So this would be the number 3 to really create this dynamic trust score. After you created your digital identity and you're already built your reputation, the next step is to go there and actually request a loan. And instead of going and providing your assets as collateral, you would provide your trust score or your reputation score. And then depending on how good or bad your reputation score is, the terms of the loans would be different, like higher or lower interest rates, higher or longer or shorter periods of time. As a next step, in step 5, we could include decentralized verification. So instead of just relying on AI for really creating this trust score, we could submit this decentralized verification so that we have a human touch and we have another eyes on it to make sure that that score is real, that it wasn't manipulated, that everything is running as it should. Next up, you have the loan fulfillment. So you would either have a marketplace that a lender can come and voluntarily fulfill your loan, or just an automatic fulfillment of the loan, depending on your trust score, depending on the borrowing terms that you required for, and this would be executed all on chain based on the rules of the protocol that creates this system. And lastly, as you repay these loans, this would increase your reputation score as well. So if you got a loan under collateralized and you didn't pay for it, your reputation score, your credibility will be hurt very harshly. But rather, if you're already taking a bunch of loans and you fulfilled all of those, you didn't default, you paid in time, then this will increase your reputation and it will be easier for you to get better loans the next time. This trust-based decentralized system really creates a shift in paradigm in the traditional market. It's a shift from what you have to what you've really done. And depending on how we do this analysis and how we track the reputation score, this can be a much, much better benchmark of how trustworthy an individual or an entity is for getting a specific loan, for getting a financial service or a financial asset provided to them. And this under-collateralized lending has been discussed for a while, but it was always deemed as very, very risky. And it still is because no one has executed it yet. But this is a big shift from what you have to what you are. From physical or digital assets to really the physical or digital footprint. So the footprint of your actions determine whether you are able to receive a financial term or not. This type of solution can create a lot of benefits for smaller business owners. So people who didn't have access to financial terms beforehand now can prove that their digital reputation is sound and that they are able to pay back loans, that they have done things that show that they're more likely than not to pay back the loans. And this can really increase financial access for people who are smaller, who didn't have access before. So the traditional finance really concentrates the power and grants benefits to a portion of businesses and business owners who are already credible with their own systems of identification. But now we have a decentralized way of doing this and to submitting everyone to the same rules, to the same ecosystem guidelines that you have to follow. So if your digital footprint is good, is positive, you get the loan. If it is not, you won't. And this is very different from the kind of relationship-based system that we have in traditional markets today, in which companies have years and years of relationship with a bank or with a traditional institution, and they get better services or more rewards or better terms than others who don't have this history with them. And when we're talking about this type of solution, it's not only about numbers, assets, and profits. It's really about shifting the paradigm, as I said earlier. And here we're increasing the access. We're creating opportunities for people who beforehand would not have the opportunity to really be included in the financial system or would never have access to certain loans. So this is really a shift from the tangible physical assets to the intangible action-based kind of reputation systems. And at the end of the day, this type of solutions are not only about profits, but rather really reimagining value. And sometimes we can shift the paradigm and shift the understanding of how we look at the world, what type of things we value. And we believe that right now we're going to an era in which trust is the most valuable asset existing. And if you enjoyed this type of content, please don't forget to really like the video, subscribe, and leave a comment if you have any questions. Here we try to explore a topic that is AI and crypto. A lot of people talk about this in a hype sense, but here we're talking about real applications of it. So I hope you've enjoyed this type of video, and I'll see you in the next one. Bye-bye.